Okay, so thank you once again. So I'm going to go straight to the topic of our discussion today. So as I read earlier, the topic is investment insights, unlocking the secrets of stock market trading. But before I go into that, I would want us to have this information about how the stock market performed last year compared to last 2 years, so 2022 and 2023. So in 2022, the stock market returned negative 12.38%, and in 2023, it returned 28.08, meaning that in 2022, if you held stocks or you held positions in the market, you would have lost some money. Okay, and in 2023, if you still invested, had some faith in the market, you would have gained about 28.08. The financial stock index returned minus 7.36 in 2023, and again in 2022, it was still a minus. So scrolling, I think the graph that we can see shows how it has performed from 2019 to 2023. So in 2019, it was minus 12.25, 2020 minus 3.98, 2021, 43.66%. As I mentioned earlier, 2022 minus 3.38 and 28.08 in 2023. So this shows that in the last 5 years, it was just in 2021 that the market returned very, very strongly. That is a 43.66. And the second best performing 28.08%. So in the last 5 years, as you can see, the market has returned positively twice. And because it's an election year, I would want us to look at how the market has performed throughout our fourth republic, not the 1992 election. I didn't pick that figure. Yeah, so from 1996 to 2000 to 2020, all right, to 2020. So 1996, it returned 13.82, the year 2000, 16.55, 2004, 91.33, 2008, 58.06, 2012, 23.81, 2016, minus 30, 15.33, 2020, minus 13.98. 2016, the negative you can see there, it's because in 2016, there were, if you can remember, all right, we had some few issues with the economy coming from 2015 to 2016. So around that time, there was high interest rates, high inflation, not compared to today. I mean, these current trends are on the very high side. Okay, but in 2016, in its own terms, in 2016, compared to previous years, all right, there was high inflation, high interest rate, there was high depreciation, and so on. So around that time, IMF came in. Okay, IMF came in, and things started to improve. So in 2017, we don't have the figure yet. 2017, the market returned about 50%. All right, there was injection into the market. Inflation was dropping, interest rates was dropping, activities were improving. In 2020, we had a similar situation, not IMF, but we had a situation where the financial markets restructuring, which started in 2019. So in 2019, we had the financial sector restructuring. It affected the stock market. It affected the stock market because the driving the driving force of the stock market has always been the financial sector. So we had the financial sector being hit very hard. So it affected the whole market. And that is why we can see what is happening there. So there was difficulty in the economy at the time too. Okay, so once the financial sector got hit, once the restructuring was ongoing, there were a little challenges. There were some challenges. I won't say a little, but there were serious challenges, even as we can see now that things are even recovering. So in 2024 too, we can tell that things are improving. So last year was very hard, was very difficult. There was very, very high inflation, the highest that we've seen in the history of this country, high interest rates, one of the highest that we've seen in the country, and so on. So we've had IMF coming again. Okay, so what does it tell you? It's like a deja vu. It's going to happen again. 2016, negative. 2017, market boom. 2024, okay, the market has started picking up. Even started 2020, last year, 2023, as you all can see, 28.08. So it's going to continue to perform gradually. So we expect that recovery will continue from now into next year. So at the end of the day, you realize that if you had invested in the stock market around this time, it would be a very good decision. Let me take you through some of the best performing stocks on the market last year. So BOP was the best performer for last year with 187% increment. So those people who are there talking about the stock market not being an avenue for investment, the figures don't lie. All right, Total 125%, Unilever 109.02%. If you have an investment returning 100%, I mean, so you see, and all these things that all these figures that I'm mentioning here, these were projected by participants of the stock pitch competition. Okay, we had some of them projecting Total, Bob, Unilever, Guinness, Societe Generale, and so on. So these are stuff, it's not, they are not stuff that they just happen, right? With the figures, with the analysis, you can have these things reflect in your books. All right. So this is just an introduction to what I'm going to talk about. Okay. So I hope you all understand or you followed through what I've displayed here. So I'm going to go back to the topic for discussion. Um, okay. So I am going to start from this point, stock market trading, the secrets, as you guys have uh, brought the topic. So the first thing you have to do is to understand the basics. So before diving into stock market trading, it's crucial to understand the fundamental concepts such as stocks, bonds, mutual funds. Then about the key terms like market orders, limit orders, dividends. Familiarize yourself with how the stock market operates, including stock exchanges and indices. So as you can't just wake up one day and say, I want to be a stock trader. No, you have to take your time, understand the basics. It is very important. So if you don't understand what stocks are, what is your business in trading? If you don't understand what bonds are, there's no business in trading, mutual funds, and so on. Limit orders. Okay, we have Young Investors Network. We have a relationship with the GC. They are the organizers of the training for the GSE courses in the country. So we're going to announce it very soon. This is the first time hearing it from the executive team of Young Investors Network. We're going to have a relationship with them where we're going to recommend people like yourselves or any of you who would want to participate in the courses. You want to have recommendations to them so that they give you a certain kind of preferential treatment for young investors members. So if you're not a member of the Young Investors Network, this is the time that you have to rethink. You have to be part of this great organization so that you benefit from things like this. Okay, so you need to understand these are basics before you enter into the stock market, before you start trading to earn what BOP and the other stocks are reflecting, as I showed to you in the earlier slide. The next thing is to do your research. All right, do your research. Young Investors Network, one of our main pillars is our ability to conduct financial market research. We do a lot of research which come which reflects what is happening in the market itself. So it is important that you understand what research is. You learn how to conduct research. Okay, economy analysis, the industry analysis, the company analysis. Then you do your evaluation. Okay, so successful stock market trading requires thorough research. Take the time to research companies, sorry, that you are interested in investing in. Look at the financial health, earnings reports, management team, competitive positioning. Consider macroeconomic factors and industry trends that could impact your investments. So these are all stuff that we offer training in at Young Investors Network. So it's if you want to be a very successful trader, consider joining us. All right, so that we train you. Okay, so we train you to be able to make projections in the market. The next thing is to learn how to diversify your portfolio. So don't put all your eggs in one basket. Okay, you don't say, oh, well, I can see that Access Bank is doing very well, so I'm going to put all my money in Access Bank. No, you don't do that. Okay, there were some people too who said, oh, government bonds, they will never fail in the payments of interest or coupons. They will never fail. So they put all their monies in government bonds, then the unexpected happened. So diversification is key to managing risk in stock market trading. Spread your investments across different assets, industry, and geographic regions to reduce the impact of any single investment's performance on your overall portfolio. Okay, so when you say portfolio, it's the different sector of investment put together. That's what we call a portfolio. You need to diversify your investments or your portfolio. You have to stay informed. Okay, you have to stay informed. Stay updated on stock market or market news, economic indicators, geopolitical events that could affect stock prices. Subscribe to financial news outlets. Follow reputable financial analysts and commentators, and utilize reliable investment research platforms. Regularly review your portfolio and adjust your investment strategy as needed. Okay, so staying informed in Ghana here, a lot of business platforms that you can pay attention to. Okay, so like the Nova reports, for example, they put out very uh, in-depth information about the stock market on a daily basis. So it is important that you stay informed. Okay, the Investor of Ghana recently participated in a global stock market competition, and as I was telling them that you know for the international markets, it moves very fast. Okay, investments or the prices move very fast on the international market. Even the death of a CEO can change a lot in the stock market trading. Okay, or an introduction of a product. Okay, our market is a bit slow, but this information too, if you pay attention to them, you may win or lose in the market. So, for example, our market is very sensitive to dividend payment. Okay, so when the company announces that there's going to be a dividend payment, well, the next step is that we see that prices start going up. Prices start going up because investors need return, and paying dividends is a sure way of getting some return. Okay, so our market too, even though it's very slow in reacting to information is very crucial when it comes to investing. So you have to stay informed. Practice patience and discipline. So stock market trading requires patience and discipline. Avoid making impulsive decisions based on emotions or short-term market fluctuations. Stick to your investment strategy and remain focused on your long-term financial goals. Remember that successful investing is a marathon, not a sprint. Okay, so remember that successful investment is a marathon, not a sprint. Okay, so with all this being said, stock market is about patience. So when you're doing your projections, you project not just 1 year, you project maybe 5 years, and you stay focused. All right. One of the stock pick participants, like Stephen Appiah, all right, he made his projection on 5 years when he was analyzing Access Bank. Okay, and per his projection, Access Bank is expected to hit more than 20 cities in the next 5 years. That is his projection. So with this situation, in the short term, when the price starts dropping, it's been fluctuating, you don't pay attention to that. You pay attention to the projection that has been made. All right. And it is very important that we remain focused and we are very patient. Okay. So successful investing is a marathon. It's not a sprint. I want to summarize by just giving advice to young traders, or advice for young traders. So you need to educate yourself, prioritize education and learning about the stock market, understand the fundamentals of trading, different investment strategies, and the dynamics of the market. Utilize resources such as books, online courses, seminars, and readable financial websites to enhance your knowledge and skills. I think this speaks for itself. Start with a trading plan. Develop a clear and well-defined trading plan that outlines your goals, risk tolerance, entry and exit strategies, and position sizing. Having a solid plan in place helps you stay focused, disciplined, and systematic in your trading approach. Regularly review and adjust your plans as needed based on the market conditions. Regularly review and adjust your plan as needed based on the market conditions and your evolving objectives. Manage risk is very important. You have to manage risk. So effective risk management is crucial for long-term success in trading. Never risk more than you can afford to lose on any single trade. Utilize risk management tools such as stop loss or this. Once you educate yourself, these things will become you very familiar with all these things to limit potential losses and protect your capital. Diversify your portfolio to spread risk across different assets and sectors. Additionally, continuously monitor and evaluate your risk exposure and ensure it aligns with your overall trading goals and risk tolerance. So this is the end of my presentation. I'm available for questions. So Jessica, you can take over from here.
Thank you very much, Sir Kofi. Please, I want us to appreciate him in the comment section. Kindly type something you want to send to him. God bless you. Thank you, sir. We are so, so grateful for explaining all these things to us. I'm sure a lot of us have taken invaluable lessons from it. I would like to skim through the steps he gave to us. He said that we should understand the basics. We should do our thorough research. You mustn't go into any investment portfolio you have no idea about. You have to do your personal thorough research and also diversify our portfolio. We should also stay informed. We should practice patience and discipline and also educate ourselves and manage risk. I'm sure a number of us really enjoyed this session. And like I mentioned earlier on at the beginning, I said that ask questions. Ask questions. It's here to answer all our questions. And so please, if you have a question, kindly raise up your hand. I'm going to call you one after the other, and then we proceed with that. And also, if it locks you out, kindly rejoin using the same link. Okay, while we are answering our questions, our link will expire. Please kindly rejoin using the same link so that you don't miss out. Okay, so Jeffrey, please, you can proceed with your question, after which Godfred will come. So Jeffrey, let's go.
Thank you very much, Ika. Well, my question is simple. When I browse on the Ghana Stock Exchange website, I see the companies categorized into two. Or
hello, Jeffrey. I think we lost Jeffrey. Okay. Hello, Jeffrey.
Please, did you get my question?
No, we didn't get you. Please come again.
Oh, okay. So on the Ghana Stock Exchange market, there are two types of markets. There's the main market and then the alternative market. I'd love to find out what the difference is between these two markets.
Hi, Jeffrey. Don't go off. All right. So have you monitored how the alternative market has been performing?
No, not really.
Not really. Have you tried to look at a trend? What information do you have about that market?
Well, I only saw at least that was what the Ghana Stock Exchange said. They said it's a market of fast growing companies. That's what they said. I haven't done any analysis yet on that market, but I hope to do so in the future.
Okay. So basically it's for that market is a startup business, small and medium scale enterprises. All right. So you yourself, if you have a business that you want to get listed, all right, it doesn't need to have any strong history, financial history. All right, all you need to produce is a business plan. All right, you see, the stock market is all about convincing the investor. So if you are coming out with a business that investors will buy into it, why not? Okay, so I asked you about the trend because the markets, the GAX, that's how we call it, the GAX, is quite dormant, right? There's little or no activity over a period, over a long period. You won't see trading happening, you won't see prices changing and so on, right? Something that is not being done right on that market. So that is it. That's the market for businesses that are coming up, small and medium scale enterprises and so on, right? But we know about the main bus, the main market. The main market is where all the action is, right? If you ask me now, or when you ask me a question about that GAX, I will say you have to stay off for now, right? And rather pay attention to the main market. Hope I've answered your question.
Okay. Yeah, thank you very much.
Okay, thank you, sir. Godfred, please let's go. So right after Godfred, Hack, please kindly follow with your question. Okay, right after him.
Okay, my question is very simple. Sir Kofi, please, you see, with the stock market, we have two types of returns. Those who pay dividends and those who don't pay dividends. I just want to know how those who don't pay dividends make profit. Investors who invest into stocks that don't pay dividends, how do they make profit? Yes.
Okay, so investors, everybody or every investor and their purpose or their focus. There are some investors who would just want to take positions in a company for the purpose of taking over. Some investors to value investors, some are looking at capital appreciation. So, for example, Access Bank, for a long time, they weren't paying dividend, but you can be assured of a capital appreciation. They paid, I think, just once in over a long period. All right. So if dividends are not paid in the next 5 years, we still expect the price to get to the levels that the gentleman Napier projected. So it depends. It's very dependent. So capital appreciation is one aspect or an area that investors look at. So if the capital appreciation is expected to be very high, you can still go for it. But there are some stocks too which have a quite flat performance but still pay dividend. So a stock like Goil, okay, capital appreciation is not really bullish, but regularly they pay dividends. All right. So it depends on the investor's perspective, how the investor wants to look at the market. Yeah. So if you are going into a stock, you are buying a stock and it doesn't pay dividend and there's no capital appreciation, and you don't have the motive of taking a position in the company, why waste your money? All right, and you better buy some treasury bill. Okay, so basically that's the answer for that.
Thank you very much. I
You're welcome.
understand. Thank you.
You're welcome.
Godfred, are you ready, please?
Yes, I'm with you.
Okay, let's go.
Please, I've asked my question. Oh.
You have. Okay, I think then it's Hack. Sorry. Hack, your question. I don't know if I've got your name right.
Yes, don't worry. Good
Okay,
evening.
thank you.
Yeah, please, I want to ask, I'm not part of the Young Investment Network, so I saw the link on the school platform, so I decided to join. Please, how do I join the network? Then secondly, you did mention about online classes that can teach us how to trade in the stock market. So which online class will you recommend for young investors? Thank you.
Well, Jessica, I think you should answer these questions.
Yes, please. Okay, so you mentioned that you saw the link on your school's page. I don't know which campus you are in, whether UPSA, UCC, UG, or KNUST,
Oh,
whichever campus
please,
you
I'm
are on.
UDS.
Pardon me?
I'm in UDS.
UDS. Okay, I think you have a campus head. Yes, you have a campus head. So kindly reach out to him, okay? And he's going to register you as part of their members. And then he'll add you to, I think, their official page for just members. I'm sure you saw the link on your community page So when you become part of the members, you have access to daily updates on the finance space and all of that. And also for Money Talk, we talk about investment portfolios. That's why we're here. So we teach you the basics, like what we are doing today. So I'm sure this is your first time. If you keep joining, you realize that there are so many things to learn. Okay. And also your campus heads organize programs in their schools. Maybe once in a month or once in 2 weeks, you meet to discuss certain things about investment and savings. Every campus does that. So kindly reach out to your campus heads and he'll add you to their members. Is that fine, please?
All right, thank you.
You're
And
welcome.
please let me add this. Jessica, I think you should share a contact, all right, where he can make a call to make inquiries at our level.
Yes, please.
So get in touch with him ASAP and assist him.
Yes, please. Okay. Joe, please, you can ask your question, Joe. And if there's anyone who has a question, kindly get ready after Joe. We are going to take 2 more questions and we are done for today. So Joe, let's go.
All right. Good evening, and thank you very much for this opportunity. I actually joined, I think about 15 minutes late, or so. Yeah, but I got the opportunity to get everything. It was okay. Yeah. So my question is around the trading aspect of what we studied today. I have personally been in the foreign exchange markets, trading currencies and gold for about 2.5 years now, and I want to go into the Ghanaian space. More like I want to do investments into the Ghanaian market. And that was one reason why I actually joined Young Investors Network. So my question is, how do I get access to the Ghana Stock Exchange market? And then if I want to take a training on how to trade on the Ghana Stock Exchange market as well as I do with the international market, where do I go? Because when I joined Young Investors Network, the first week of me joining, that was the first thing that I asked. And then no one replied me. No one gave me an answer. And I got angry for a while. But I was like, it's okay. I just overlooked it. So you bringing it up now, I would really love for you to maybe send us links of maybe the websites for the news, then some stuff, just so we can get a little bit of knowledge. Yeah, so that's what I have. Thank you very much.
Okay, you're welcome. All right, so this video can be accessed on our YouTube channel. So in case you want to take a listen